this is probably the most important lesson you'll get in this space, and it's very important. Like, it's more important than technical analysis, it's more important than fundamental analysis, than risk. And it's because no one tells people this when they get started. So I wanted to explain to you basically the difference between those who do really, really well and those who fail. And it's actually simpler than you think. It's not as complicated. And especially when you look at this data I'm about to show you, you'll see what I'm talking about. So first of all, this is just some stats off of Trade City, where some statisticians basically were taking some data to see, really, do 90% of traders fail? And what they found out was actually it's higher than 90%. I think they said it's about 97%. And here's what they concluded. First, they said all traders start with the dream to get rich quick. Now, that's not true. I never got involved in order to get rich quick. I genuinely enjoyed it. And I think I've said this before, that I traded demo for 2.5 years. I had zero interest in earning any money from it, simply because I was a student. I was a student, like 18, 19 is when I started. I was a student, had zero interest in making money. I didn't have pressure of any bills of some sort. So I genuinely wanted to learn. But for the most part, most people jump in because they heard that you can make money by clicking buy and sell off of your cell phone, and that it's easy, right? And then here's the next data. 40% of people trade for 1 month. It's not doomed. It's not to say that you can never make money. It's just that when they say 90% fail, it's because 40% of them are going to quit after 1 month. That's the data. 40% are going to quit within 1 month because they heard it was easy. They weren't here to learn. They were here just to make money, and that didn't happen. 80% quit within the first 2 years. These are the people who, I think these are the people who trade live and didn't test their data, or maybe they were involved with signal services and then they tried to go it alone, or they didn't have a good educational base, but they quit within the first 2 years. And then only 7% remain after 5 years. Now, this is where it gets really, really interesting, because when you look at the data, even from the FSCA, which is the South African Financial Regulation Board here in South Africa, you'll find that even when you look at the data of regulated brokers, 76% of the traders lose money. And they say specifically it's around 75, 76%. So that means that there are those who are actually making money. And it's possibly that they're around maybe 10 or more percent who are making money. And usually it's those who stick it from like 5 years and above. And it's important to know that, yeah, 3 to 5 years is a good target to give yourself. And so for me, I nearly went for nearly 3 years just demo and learning. I had zero interest in making any money. I just wanted to learn specifically everything I could learn. And I think that helped me more. If you come out here with the mentality of getting rich, which is where they start, it's going to be a very bad journey for you. And rather pick another industry to go play with, but not this one. Now, let's look at how 1% of all traders can profit net of fees. They're only talking about day traders. If you're not day trading, you have more than 1% chance of doing well. They're just talking about day traders. So day traders do even worse than the 10% who are doing well. Now let's look at a bit of these stats here. These are more stats which were done on the brokers in the UK. And what's important to bring to your attention is this. There are 35% of traders who are searching for brokers using a mobile or tablet device. And there's a danger in doing your analysis over a device. It's a terrible idea. Rather invest in a laptop and in your education than trying to draw lines on a phone and thinking you're going to become a Forex trader off of your phone, right? I mean, you can go to an internet cafe, and I've always talked about this, like try to maybe even go to an internet cafe, pay for an hour where you can, and do some analysis on a laptop and not on your phone. Anyways, 90% of successful Forex traders these days use robots. They're not trading themselves. This is interesting because Anton Creel talked about this in a long interview he talked about, where he was saying that investment banks nowadays they use they use uh, not expert advisors, but they use robots which trade for them. So realistically, the days of someone actually doing the analysis and all of that are gone because that technical analyst can simply make a program which can trade like him. So there's really no need for him. That doesn't mean that you have to use robots. It just says that there'll come a stage where once you are in the groove of it, you have a good system which works, you can start using robots. And that's 90% of the successful ones. So it just tells you that this is a really, really difficult game. And if you're coming here thinking that it's going to take you a month to learn, we'll get into it. Here's another interesting thing Anton Creel talked about. He said that retail traders trade the same pairs, which is the euro, US dollar, and these other pairs here. And they're popular for a reason. They're popular because they're liquid pairs, and it costs the broker less to um, to secure those transactions. So for them, they would rather have you trade these pairs, and then you over leverage because you're trying to make more money. That's another thing you should know. And then there's obviously this controversial statement by John Foreman. He's a PhD researcher who said that nearly 100%, so 99.6% of retail Forex traders are unable to achieve more than 4 to 4 back-to-back profitable quarters. Whether they have a good strategy or not, losses are inevitable. Now, this has been misinterpreted by so many people. And if you don't believe me, you can go to LinkedIn. You can ask John Foreman himself. He's a very nice guy. He actually said when I did inbox him, because someone was saying that it's impossible to do well in Forex because of John Foreman's research. And actually, he's a Forex trader himself. And he said what he was saying essentially is that losing quarters are inevitable. And so, for example, I said usually that I can have four months of losing trades, right? And he was like, yeah, that's normal, but still the year will be good because if you've made, say, you've made 90% throughout the year, and then you have 4 losing months, and you lose 40%, you're still 50% up for the year. So his research has been misinterpreted by many people who said that you can't be profitable, and that's not what he's saying. What he's saying is that you will have losses, and sometimes it can be 4 months in a row of losing trades. And so he's saying you can still have a profitable year, but if you don't manage your risk and your drawdown levels, we're going to get into that just now when I look at two different traders. If you don't manage your risk properly, you will blow out or you will never reach profitability. And yeah, that's pretty much all of that. And now let's get into the really interesting stuff. What I've noticed about most people who jump in is that they're so concerned with their win rate. I don't know why they're obsessed with it. And I know this because when I was teaching a few students, and this is a reason why I stopped taking new students and why I won't in the future. I think it's because maths literacy isn't emphasized in a lot of schools, or possibly just people who are interested in Forex. Maths literacy isn't taught much. And there's this obsessive need to win every trade. And so the common message I always get is, I'm losing. And I always respond with, so what? Like, everyone's losing. Like, I don't know why it's such a shock. And I think it's because maybe the media presents to you that you have to win every trade, or it just makes sense to you that to be profitable, you have to keep winning. And so, what tends to happen with new Forex traders is they want to avoid the important stuff, which is important for you to do well, which is managing your risk, calculating your risk, recording your trades, having good accounting records. They want to avoid all of that. And so they think they just have to keep improving their technical analysis. So they'll keep improving their technical analysis and keep losing and improving their technical analysis. And then they wonder, does anyone even win in this? Because they keep losing. And that's not the point. This is from Admiral Markets, and they're talking about the best forex traders in history. And they talk about this guy, Bill Lipschutz. I hope I'm saying his name correctly. And he was basically saying that, and apparently he made profits of hundreds of millions of dollars, and that's obviously billions of rands. And what he said is that you need to know that you're going to be wrong. You're going to be right only 20 to 30% of the time. You are going to be wrong 20 to 30% of the time. So the question is, if this guy who's made hundreds of millions in the forex market is telling you you're going to be wrong 70% of the time, how did he make hundreds of millions? And he just says, listen, this is the important things you need to know. Um, you need to have trade ideas. You need to do your analysis and check out all your boxes. And then you need to, when you are correct, go big. It means you need to add into your positions. You need to have a strategy which allows you to add into your winning positions. You can't just, and this is something I also see with traders, that as soon as their trades are in profit, then they close them. But he's talking about building a position as the market goes your way and adding positions to those that are winning, not to the losing trades, but to the ones that are winning, right? He talks a bit about looking at the fundamentals. When fundamentals are starting to go against you, you need to start getting out of your trades, right? Um, Oh, yeah, he talks about, well, the important thing to know from him is he's basically saying you're going to be wrong 70% of the time. And Stanley Druckenmiller agrees, and he's also included in this article. And he traded with George Soros, and obviously I think his net worth is nearly about 3 billion US dollars. And he also says the same thing, you're going to be wrong most of the time. And something else I want to show you is this. Here's where a lot of traders get stuck. This is an example of a signal service which is offered by FX Street. So they have different strategies, right? And what you'll notice, which is very, very important, is this. This side is their strategies, right? This side is their strategies. I want to show you something really, really important here. This is the win rate, and this is how much money they're making. What you will find with most traders is they're trying to win most of the time. And can I tell you what happens when they try to win most of the time? Here's what a strategy that wins all the time does. It has a high win rate and then it makes the least amount of money, right? Can you see this? If you look at this data, the the strategies which are making the most, right? This is the breakout Fibonacci, volatility, impact. Don't focus on this. This doesn't matter. What matters here is that the most profitable strategies have very low win rates. Look at this, 39%. This person is losing every day. That's what it's telling me. This guy has a net profit of 1,685, but he's losing 60% of the time. Meaning if he places 10 trades, 60 of them are going to be wrong that month. Okay, so I mean, like if he places 10 trades, six are going to be wrong that month. If he places 100, 60 are going to be wrong. He's losing every day, but he's making the most money because when he's right, he has a way of adding to his positions and he holds on to them. And then, as you can see, these people are also making more money. This is just a bad strategy because it's just a negative. But what you'll see is as your win rate starts to go higher, the amount of money you make actually starts to go down, right? And I think it's important to know that because what tends to happen with I think it's a psychological thing that when you have a high win rate, what tends to happen is you over leveraged and you go hard, so you win big, but then the markets can easily turn against you, and then you lose big as well. So you end up making very little in the end. Um, that's what tends to happen. And so what happens with a lot of the gurus is that they only show you when they win, and they tell you they have an 87% win rate, and they show you the winners. And then when they lose really, really badly, and then they end up making very little money. So now let's dive into two traders. I wanted to show you the difference. I came across say, for example, this is one trader who I met on his journey, and a second one. And basically, these are the students I encounter on a regular. So trader A is the profitable trader. Trader B are the students I encounter most of the time. Trader A is the profitable trader, and let me show you what's interesting about him, and you'll learn a lot from him, and then you'll see what happens with most traders who jump into this. The profitable trader, who I've said is trader one, he has $1,000 account, right? That's important. He made sure he invested after he had knowledge on what he was doing. He wasn't trying to get rich quick. He was trying to build wealth and actually build a good stream of income. He doesn't overtrade. Trades maybe places 10 trades a month. He loses seven. This is important. He loses seven and wins three. And then each loss is 1%. So he loses $10 on his $1,000 account, and each win is $12%, or $112. At the end of each month, he will still be in profit, even though he's lost seven. That's where most traders get it wrong, because they're trying to win every trade, and I don't know why. Like, I lose a lot of them, but I don't know why they're so obsessed with winning every trade. And a good book to read for you guys is a book called The Way of the Turtle. It's based on one of the market wizards. What's his name? Dennis Richards, I think. Dennis Richardson or Richard, I don't know. And these are people, I think he made, how much was it? 600 million? No, it was 60 million. So the book is called Way of the Turtle, and it's by Curtis Faith. And I think he made 60 million US dollars, which is about, say, 700 million rands. And he was trained by one of the traders, and he will tell you they had a 35% win rate. They lost nearly 70% of their trades. They lost every day, or not every day, but most of the trades they placed, they lost. And this shows you exactly the same model, where he loses seven of his trades, but where he wins 12%. So he makes up for all those losses when he wins. That doesn't mean that he places 10, 5, 8 trades to win and make up. No, it means that his strategy that he implements has a 1 is to 12, say 1 is to 12 to 1 is to 15 risk to reward, meaning every time he loses 1%, but he wins 12%. I'm going to show you one of his trades just now. And so he has 4 losing months out of the year, sometimes in a row. He never loses more than 10%. So if he's having a bad month, he hits 10%, he closes his MetaTrader, he's done. Doesn't keep trading and keep losing. He understands volatility and leverage, so he's not over leveraged. And that's what happens when you trade a smaller account. For all those who are jumping into trading, when you trade a smaller account, the problem is you try to over leverage because you don't want to invest in your account. You try to win more with a smaller account, and that never ends well. He understands volatility. So if you trade more volatile pairs, you don't have to over leverage in order to make more money. More volatile pairs bring more money, essentially, is the point. He understands biases, and hence he backtested his strategy, meaning he's not trying to analyze and be correct. And that's important to note, because a lot of people who start off, they think that they have to, and they think technical analysis is being correct, right? And I had an argument with someone, one of the subscribers, who basically said, "Oh, but you lost the trade." I knew it was going to go the other way. And I'm like, that's not the point of trading. The point is to follow your strategy. Your strategy is like a game plan. In the end, it wins. And that's the point. You should follow it. If it says buy, you buy. Whether you think it's going to be wrong or correct is not your problem. You should be following your strategy, not trying to guess whether you're going to be correct or wrong. And then the most important one. The most important one is he has a good trading records. I've tried to get students to do this, and they never have. And that explains, I think, the biggest reason why a lot of traders don't do well. They don't have trading records. They don't want to keep them. They don't want to have any trading records whatsoever. They think you just have to place trades, close, place them, close, and then you just go to your history, and that tells you everything. But it's more complicated than that. And so, for example, here's his trading records. So you'll see on his records the date of the trade, the time of the trade, the strategy for the entry of the trade. Was it a buy or sell? Um, what was the risk to reward? What price did he exit? Um, what else is here? Pips gained, pips lost, percentage change, right? Percentage change, you obviously have to know, and then obviously the amounts. He also adds to his trading account, and this is the important thing as well. A lot of traders who jump in think that the forex industry is supposed to be paying them, so they think that they should be flipping their accounts and making money and withdrawing, withdrawing, and withdrawing. And realistically, you're trying to compound your account. So you're trying to have an account where you have money in it and you're supposed to grow it. So he has $1,000 account. He adds another 2,000 so that next year he's starting off on 5,000, right? He started off with 1,000. He has 2,000, and then the next year he wants to be starting off on 5,000, and he's building his uh his his account through compounding. The difference with other traders is they start off with 100 and then they're like, I'm going to flip it until I get to 2,000. Zero accounting records, zero strategy, implementation, or anything. So this is his back tested data as well. So he tested his strategy. He picked a strategy, he tested it. He didn't create anything, he wasn't a genius. He just picked a strategy, he tested it, it was profitable, and he implements it. So his is based on Fibonacci, by the way. So here's an example of how he would trade. This is a Fibonacci buy, right? He does his technical analysis. He enters the trade. He watches it throughout the week. On Fridays, he does his reviews. Did he follow his strategy? Did he follow his risk plan? And then he does his calculations. How much retained profit did he keep? What percentage of his account did he make? And things like that. And now let's go on into where most people are, which is Trader B. Trader B has invested no money into his education. And that doesn't mean you have to pay for a course. I myself am self-taught. I spent 2.5 years reading books, watching YouTube videos, which doesn't help, by the way. That's like the worst thing to start learning on YouTube. I can tell you now, most YouTubers are teaching you support and resistance and trend lines. And there's a reason for that, by the way, because it's the most popular thing, trend line and support and resistance. They just make their money from the YouTube videos, and then that they don't have to be trading, they don't have to be doing anything. So you try it, and then you think it's just okay. So Trader B reads about support and resistance and trend lines, doesn't know anything about backtesting, and support and resistance and trend line isn't a strategy. So he doesn't even know there's such thing as a strategy because he's thinking support and resistance is a strategy because that's what he's seeing on YouTube. You could read books on this and teach yourself, to be honest, but obviously it's going to take you longer, right? So you have two options. Either you can invest in your education, right? Or you can teach yourself. And it's just if you teach yourself, you need books. You need to be someone who loves to read books, who enjoys stats, who enjoys things like that. You can teach yourself. Trader B starts with 100 US dollars. The reason why in fact, no, starts off with $5. All right, it's usually $5 because number one, he knows in his heart that he doesn't know what he's doing, and number two, he thinks it's a get rich quick scheme, or he thinks that he can make $1,000. He can flip his account to $1,000. So he has zero interest in deposit. He just wants to withdraw, right? He just wants to keep withdrawing throughout the year. That's what he's interested in. And if he was calculating his risk, he would know it doesn't even make sense to be trading less than $1,000. It doesn't make sense. So he obviously clearly is not calculating risk or reward. um, he doesn't understand risk management at all. Because how do you manage risk of $5? That's spread. Literally, that $5 is going to be eaten through spreads, right? His drawdown is usually 85% of more of his account because he opens seven positions every time he trades. He doesn't keep any records because he thinks going to his history is his records. Doesn't care about fundamentals. He thinks trading is just technicals, just drawing lines and guessing whether it's going to go up or down. So he doesn't actually implement a strategy. He's just guessing whether the price is going to go up or down. And even if you say you do technical analysis and then you're saying, I can tell where it's going, that's still guessing because you don't have a strategy which you've tested. He believes that he needs to win more trades than he loses. And this is important. Like I said, most people send me messages saying, I keep losing. It doesn't matter. And sometimes when he wins, he has a 75% win rate. That's important, right? He closes his trades as soon as they're in profit, right? And there's a reason for this. He doesn't have a strategy which he's implementing. So as soon as he's making money, to him, that's important. But trading is a numbers game, right? It's risk to reward. That's all it is. It's risk to reward. Like Trader A shows, you could be losing 70% of the time. But if you have a strategy in which you're calculating your risk to rewards and you're winning a few trades and you're winning percentage wise, you are winning more than you're losing. You really have no problem. And then this is Trader B, by the way. This is the typical trader in South Africa and most around, but it's mainly in South Africa, mainly, and other African countries mainly. You'll see this. They will open more than one position. Look at this: one, two, three positions, right? What's the risk here when you open three positions like this? That means you've tripled your risk. So what tends to happen is they'll blow this account or they'll lose 65% of it. So if it was a 1,000 account, it will soon be on $65. No joking. Because this is on days that they win. When they lose, they don't show you this. And I'll tell you how I can tell you that. So here, as you can see, this is triple risk. And then one, two, three, four, five. That's 5 times his risk. Why? And do you know you're paying spreads on all of this? If you're gonna place 0.73, 0.77 positions, why didn't you just open two lots? You're playing more spreads. And remember, if you're trading, there's also swaps overnight. So it's swaps cost, it's spreads cost. These are costs you have to account for, right? They don't talk about that. And so, as you can see, the typical trader B makes 7,500, and then everyone's clapping in the comments. But he's making more than his actual account, meaning he's doubling and tripling. I recommended the book Way of the Turtle by Curtis Faith. And in the book, he also talks about, he shows the data on how the closer you get to 100% of your account, the higher the chance of blowing it. This guy lost a lot of his money. And I'll tell you how I can tell. His balance is on 4,000, but his equity is on 11,000. And how that's possible. Ask yourself, how is it possible his balance is on 4,000 and his equity is on 11,600? What tends to happen is if you say he deposited five, no, let me say he deposited 10,000 into this account, 10,000 US dollar. By the way, this is someone who's teaching Forex traders. He deposited, and it's on his website. He has like 30,000 subscribers on YouTube, and he's teaching people this. Can you imagine all this risk? Zero risk management here. And I don't know. Anyways, so say you deposit 10,000 into your account, the broker will give you credit, meaning they'll give you like imaginary money. So you'll end up having more equity than you've deposited. So if you deposit 10,000, you'll get 11,000, or say you'll get 12,000 as your total equity. So he lost from 11,000, right, from 10,000 that he deposited, and he got to 4,000. But he can still trade more than 4,000 because of the credit that the broker gives him. That's how his 7,000 is more than his balance. but he didn't tell you that. He's just teaching you and showing you that he's making 7,500. Voda, you can tell it's Telecom South Africa. This is a South African account, and it's actually sad what's going on with people. This is the typical mentality that people are getting involved, that they're getting involved in. It's actually sad. Yeah, because how do you open three positions if you're gonna pay spreads and you're gonna pay swaps? Why are you opening three positions? Zero risk management, by the way, and not telling you that he's lost a lot of his account actually, and that the 7,000 he's making it from the credit the broker gives you, and the broker gives you credit so that you keep trading. They give you credit so that if you're a trader like this, who's an educator, by the way, nearly 30,000 subscribers on YouTube, it's so that you keep trading and trading, because what the broker knows is that someone like this who has zero risk management is going to keep trading until they lose their account. They aren't following a strategy. They don't know what is the risk to reward profile of each trade. So as soon as this is on 8,000, they're gonna close, and then they're gonna lose another 6,000, and then close. So it's important to know, as we close, that your win rate doesn't matter. Invest in your education. I'm not saying pay for a course from someone. I'm not educating people, but I'm saying if you're, and by the way, there's a danger of paying for a course, because if 90% of traders are losing, why are you paying 90% of the losers? And even if you say, show me your records, he's just going to show you this. This is what he's going to show you. So be very, very careful. I'm not, this is probably a live account, by the way. I'm not saying it's demo. So be very careful. I actually saw that there's more danger in paying for a course than teaching yourself. Teaching yourself will take you longer, but it will show you whether you're interested in trading or not, right? It will show you whether this is for you or not. YouTube, the danger with learning on YouTube, and there's some good channels, I'll tell you. Anton Creole has a good channel. Siam Kid has a good channel. I like, what's his name? Falcon FX is a good channel. Yeah, those are some good traders. The others will teach you support and resistance, trend line, break trading, and other things. And they produce some. This is something you should also see. You will notice that a lot of channels that post a lot of content on YouTube for teaching, it's to make money off of YouTube, but not to actually teach you anything. So, like the channels I've just told you, if Falcon FX, Cyan Kid, and Anton Creole, you'll see that they have less educational material than the others because they're actually teaching you the important stuff. The others are focused on teaching you so that they make money off of YouTube, but teaching you things that don't work. So there's also that danger. Important things that you should know.